morning, good morning, good morning. I am your host, Raeshal Solomon, and this is Raeshal Speaks. How are you guys doing today? I am excited about today, our guest and our topic. We have Casey Williams, and she is going to be talking to us about 7 tips for entrepreneurs to start getting ready for your 2018 tax season. So as you know, I had someone come in January just to talk about the new laws of taxes and how it would affect not only entrepreneurs but hourly employees as well. So now I feel like it's halftime. Oh my God, guys, the year is halfway over. Can you believe it already? And so I know as entrepreneurs, there are things that we should have already started, things that we should be making sure that we have. And then if we don't have them, then right now is a great time to go ahead and start looking for things and getting things ready so that at the end of this year and the beginning of next year, we're not, surprised when it's time to go and file taxes and or send a check to the IRS. So good morning, and thank you for
Hello.
listening. Hi, how are you doing this morning?
I'm doing very well, thank you.
You're welcome, welcome. Thank you for agreeing to be on the show. I really appreciate having you today. So like I said, our topic was 7 tips for entrepreneurs to get ready for 2018's tax season. But before we start, I would love for you just to tell the listeners a little bit about yourself so they know who they're listening to, and then we can go into our topic for the day.
Absolutely. Hello, my name is Casey Williams, and I own an accounting firm. And I have been in the accounting industry for the last 20 some years. I've worked on multiple sides of the desk. I started out working in a software company where I helped with the design and testing and analyzing of software to be able for business owners to be able to use it in their business. And then I owned a business where I used it myself. And then I went into public accounting and I worked in tax, payroll, and bookkeeping there. And I often have people ask me, why did you decide to own your own firm? And when I worked at the public firm, I had people that would call in and reschedule, business owners would call in and reschedule their appointment because they weren't ready. And then they would call 2 weeks later and reschedule their appointment again because they weren't ready. And when they finally come in for their appointment, they were stressed and tired. You could tell they'd been up half the night getting ready, and they just procrastinated. And sometimes there were tears and fears of the tax unknown, what if they forgot something? What if something caused an audit? And all of that. And it really doesn't have to be that way. And so I created my accounting firm so that it isn't that way for my clients. And so when I say taxes or tax season to a lot of business owners, that brings up stress and fear and anxiety. And I am going to share with you 7 tips today on how to put yourself in a position that you're not all stressed out when it gets to tax season.
Great, great, great. That is perfect. That's perfect. And that's exactly why I wanted to do this show, because I feel like you said, there is some anxiety attached to it, and there is that unknown. So I feel like if people could go ahead and start getting ready now, even if they haven't already, they still have time to relieve some of that stress if they go ahead and make the changes necessary now. So I would love to hear you go ahead with step one. What's step one? What should they be looking for and focusing on right now to start the process?
Okay. The first thing I would do is to get current on your bookkeeping. So that means categorize your income and expenses, whether you use notebook paper, whether you use a spreadsheet, whether you use software, it doesn't matter. You need to be current on your categorizing the income and your expenses. And that means when you have money come in, if you have multiple streams or multiple businesses, where did that money come from? What income category is that going to? And then on the expense side, what is that expense? Is that a travel expense? Is that a an office expense? Is it a software expense? We have all these expenses in our businesses, and so we need to track those throughout the year. And then we also need to reconcile with the bank. And I have my clients do this, and a lot of clients are amazed the first time we do this because we do it together the first time. And if you go back through your bank statements and you actually look to see what is coming in and going out of your account, sometimes you'll find that you're paying for multiple things that you're not even using anymore in your business. I know when you start out in business, we start out with usually the simplest softwares that we can get by with because we don't have a lot coming in. And then as our business grows and evolves, we pick up newer softwares or more advanced softwares with more bells and whistles. And then you're so excited to get that new software and implement it into your business that you sometimes forget to call and shut off the old one. So maybe you're paying for the old one and the new one. And so sometimes it does us good to go back through and reconcile with the bank and look through those bank statements and see just what you're actually spending money on. And as you grow and evolve in your business, sometimes you're not even doing the bookkeeping anymore. You have someone else doing that bookkeeping. So what is your communication style with that bookkeeper or accountant? Do you talk on a monthly basis? Do you talk on a quarterly basis? Do you wait till tax season to actually talk to that person? I would recommend a monthly conversation. It doesn't have to be a lengthy conversation, but you do need to have that conversation on a monthly basis so that you can go over where you are income-wise, where you are expense-wise. It's a lot easier to make business decisions when you have current numbers as opposed to like a gut feel, fly by the seat of your pants type decision in your business. So that's my first suggestion. Is tip number one is to get current on your bookkeeping.
So question, you were saying we need to contact our person at least once a month. Do you feel that we should even keep our own piece of records or our own, have our own document somewhere else, even if it's just like on our computer, so that when we're talking to that person, we have something to look at? Or should they be giving us something every month for the conversation so that we are well informed?
In my experiences, we give them a copy of their reports every month so that they have that information to actually refer to. And I do a screen share session with my clients so that they can see what I'm looking at. And then we can talk through those numbers. Because sometimes I'll have a client that maybe their advertising expense is a lot higher than it has been in the previous months. And I will ask, hey, are you running an ad campaign, or, what's the plan here? Because maybe the advertising has gone up, but the income hasn't gone up to match it. And so maybe that was the plan. They're going to run a couple ads now, and then the income will come in next month or the following month. And so just communication with that person is key to make sure that you are all on the same page. Maybe you're getting ready to buy an extra building, expand a new location. That's something that you should discuss with your accountant before you actually do that, because there are tax ramifications for that. So those types of things, sometimes it's best to discuss beforehand, and so that monthly touch-based communication allows for that kind of communication to happen.
Okay, one more question for tip one, and then we can move to tip two. So if you're like grassroots, don't have the funds yet to hire professional to keep your records, then there's nobody to talk to. So do you just make sure that you're writing everything down and keeping it all as organized as you can in order to stay on track?
Yes, okay. I would. And if you can keep track of, it's best if you have business in one account and personal in a separate account. And so that keeps all of your business income and expenses together. And so maybe you have a checking account and a credit card that you're running your business off of. And then if you need to put money into the business as you're starting out, which we all do, most of us have to do that at some point in the first part of our business, then you transfer that money from your business or from your personal to your business so that you have those income and expense amounts in your business account. But yes, if you are doing it yourself, I would just make sure that you are tracking what you're doing and recording what you're doing. So when you get to the end of the year, you know what those numbers are and you're not guessing and questioning, oh, what did I spend that on? So that you have those figures. So
Okay, so tip number 2.
Tip number 2 is commit to stay current on your bookkeeping. So that means if you're doing it yourself, set something on your calendar to remind you. Every month you need to do that. I would recommend sometime in the first 10 days of the new month so that you get in a habit of keeping current. Because it's one thing to do it now, and if you go back now to remember what you did in January or February, those memories are a little bit more vague than if you're remembering what you did 15 days ago. Because 15 days ago, you may remember the situation. 6 months from now, you are not going to remember what you did with that money. So it's always best if you can keep it current. And the way to keep it current is to set a reminder on your calendar. And if you are meeting with someone, schedule that call so that you can go over your numbers together. So you can schedule that. Schedule it, the 8th, the 10th of the month so that you have it on your radar, your bookkeeper has it on their radar, and you are able to go over. And it may only be a 10, 15-minute discussion, but if it happens on a regular basis, then you get more value out of it as opposed to if you do it once a year. So that's tip 2.
Okay, I think tip 2 is very self-explanatory, very useful, but also very self-explanatory. So can we go to tip 3?
Absolutely. Tip 3 is get organized. We get receipts as a business. Some of them come in as paper. They might come in with product. They might come in the mail. We get receipts and invoices. And then some of them come into our email or they come in electronically. And how do you organize that? And more importantly, how would you go back and find something that you would need to go back and look at maybe months or years later? So if you get those in a paper format and you are tech savvy, I would take a picture of them or scan them and keep them on a drive. So I have a Google Drive folder that we call receipts. We're pretty original that way. And in that folder, I have year folders. And so then inside the year folder, I put the image. So whether it be a picture that I've uploaded or a picture that I took on my phone and then I uploaded it to the Google Drive or emailed it to myself, and then I put it by the date, and so I do year, month, day, all together. And so if I were doing one today, it would be 2018-06-14, and then whatever it was from or whatever it was. So let's say that I went to Office Depot and I bought some pencils. I would put 2018-06-14 Office Depot or office supplies, and then I would store that. And so if I'm looking in the folder in that on my screen, I'm going to see all of them chronologically to be able to go back and find something. We have this scanner in our office that we absolutely love. And so when it quit and we had to go buy a new one, I wanted to see if we'd had it long enough for it to warrant me buying the same one again, or did I want to buy something different? And so I went back through my folder to see when I purchased that scanner, and I was able to find that receipt very quickly because they were organized in our folder. Now, had I had them in a folder in the drawer in the desk, that might have been a different story. I may have never found that receipt, but because they were organized, I was able to find them. Now, if you're going to keep them in a paper folder and you have receipts like from the gas pump where it's on that Mylar or on that laser paper, you are going to want to either make a copy of it or take a picture of it, because if that gets warm, you're either going to have an all white receipt and no writing on it, or you're going to have an all black receipt with you won't be able to see what was on the receipt. And if you would need to prove something later, like 3 years later, you're not going to be able to read that receipt. So if you're going to do paper method in a folder in the filing cabinet, I would recommend you make a copy of them and put them in there in numerical order, in date order, so that you can go back and find something should you need to find it later. Now, what do you do with those that you get in your email? I have a folder in my email, in my inbox, that's called receipts. And it has, like for 2018, I have a 2018 folder, and I just slide all of them into that folder. Now, in your email, the date that you receive them is stored, so you can see those easily as well. And so that's how I store my electronic receipts that come in by email. And then I have 2 places that I keep receipts, one for email receipts and one for any other receipt that I get. But the trick is, how do you organize them? Because you may have to go back and find a receipt at some point, and you want to be able to find that easily without stressing yourself out to find it.
I know I'm being silent right now, but you are blowing my mind right now. It's so simple, but you don't think about it, because I'm one of those people in the past who's been like, oh my God, this receipt is empty, like, because all the words are faded away, you know what I mean? So then I started circling the total and writing it with marker or pen, and then writing the date. But then I'm still like, okay, that they're going to have to trust my word that this was actually $11 that I spent at Office Depot, you know what I mean? Instead of me having a copy or a picture, instead of me having that, you know what I mean, useful proof, I'm like, all I have is this, and it looks like a bunch of scrap papers, but but I promise it used to be a receipt. Oh my God, so I love that. So and then the fact that I do get a lot of email, because I do a lot of payments online through online type systems, so that's a good idea, being able to put it all in one little file together so I can keep track, because then you got to say, okay, who did I pay? How much did I pay them? What keywords can I use to find? You know what I mean? And it's like, oh my God, this is going to take forever.
And if it's PayPal, good luck.
Right. That's what I was going to say. Normally it is PayPal, and then, like 100 other people have the word PayPal in their emails too, so it's not even always receipts. So that is a great idea.
Yeah, and if you do use software, like say you use QuickBooks Online, you can take a picture of that receipt and upload it to your QuickBooks, and it will store it inside there. So that works very nicely too. Most of my clients choose not to use that feature because it's an extra step for them, but it is available. It's part of your QuickBooks Online subscription that you can do that. So that is an option too. And there's other softwares, other apps that you can use to store receipts, but we just use a Google Drive, and then we have multiple people that have access to it, and it works very well for us.
Okay. So can we go into step number 4?
We sure can. Okay, my next one is on your estimated tax payments. And I know that's kind of a little bit scary for some people, especially if you're newer in business and you've always had a W-2 up until this point. And so those first few estimated taxes are a little bit scary. Estimated taxes are on your personal tax return. So if you are making those payments and you need to use business funds to make those payments, you need to transfer to your personal account and then pay them out of your personal account. And you need to keep track, because your accountant or tax person that's going to do your books at the end of the year is going to ask you, what date did you pay those and how much did you pay? And you're going to need to provide that information. So you should have 4 of them every year, one in April, one in June, one in September, and then the 4th one can either be in December or January, depending on what year you want credit for that on. So if you want to pay that on your in the current year, you would pay it before the end of the year in December, or if you're going to put it in January, it needs to be paid by January 15th. But those are personal. I know that the income that you're tracking or counting those off of is business income, but the actual payment is a personal expense. So you need to make sure that you pay those out of your personal account. Not to be confused with your payroll taxes, because your payroll taxes are business taxes, and those are paid out of your business account. And so you should have, for your business, for your payroll, if you pay monthly, you'll have 12 of those payments, and then you'll have 4 quarterly payments, and you'll have some unemployment, and those are usually quarterly, and then you'll have an annual form and maybe even some annual tax that you're going to pay. So if you're doing personal is your estimated tax payments, and those usually you get like a voucher or a paper where you log into the EFTPS software and you make those payments. Those are personal. And then you have your payroll, which are business. So those are my reminders for make sure you keep track of the date that you pay and how much you pay, both to federal and to state, because you will be asked at your tax appointment how much you paid in estimated taxes. And as business owners, we get the opportunity to pay quarterly taxes.
Okay, so I have a question about this. How do you know, you just kind of guesstimate, or do you just tell people to pay a certain percentage? Because if you're brand new out the gate, you have no clue how much your estimated taxes is or should be. Sorry. That was one of the problems I had in the beginning.
Yes, it is. If you look at your tax return from last year and see how much total tax you paid, and that'll be on page 2 of your 1040, up towards the top, it'll say total tax. And then if you pay in 110% of whatever that amount is, you will not be penalized. So take whatever that amount is at 110%, and then divide that by 4, and you make 4 equal payments of that amount, and then you will not be penalized on your tax return. Even if you owe more when it's time to file taxes, that's okay. And you may get some back that first year. It's kind of a gamble the first couple years as you're doing it, because you're still growing and changing, and so you just take 110% of whatever your last year's tax was, and then that we call that a safe harbor. That means that you will not be penalized if you pay in 110% of last year's tax amount.
Okay, thank you.
Okay.
That clarifies a lot for me.
Yeah.
So,
okay, are we ready to move on to the next one?
Yes.
Okay, the next one I have for you is keep a mileage log. And my clients kind of groan when I say mileage log, and it really doesn't have to be that complicated. You need to track the date, the miles driven, and the purpose of the trip. And so we keep this on an Excel spreadsheet, and I also keep this on a Google Drive. And then my husband has a mechanic shop, and so he tracks his mileage on this spreadsheet, and then I have access to it as well as he has access to it. There are some apps that you can use. Some of them have like a free trial that roll into a payment, and you're welcome to use those apps. They work very nicely because they give you a nice report at the end of the year of how much we're business and how much we're personal. We don't do that. We just track it on a spreadsheet. I have clients that have a clipboard that they carry in their car, and they, write it down when they start, what the beginning odometer is, what the ending odometer is, and then I do the math for them. However you want to do it, however it's easiest for you. But let me explain to you how worth it might be for that little bit of pain to have to track your mileage. My husband has a mechanic shop, and so all through the year, he uses his business card to pay for gas in his truck and oil for his truck and whatever else he does for his truck. And then at the end of the year, I take that number out. We call that car maintenance. I take that out, and I plug in whatever the mileage number is. Miles for 2018 is 54.5 cents a mile. And last year when I did our taxes, I took $7,000 out for gas and fuel or oil and whatever maintenance type things he had charged to that account. And for mileage, I put in $12,000. So it is worth it if you drive any bit for business miles to track those miles at 54.5 cents a mile. And that changes every year. It's usually about the 50-cent range, though. So like last year, it was like 53.5 or something like that. So it changes a little bit every year, but very well worth it to track your miles.
Wow, that's amazing. Like I've kind of heard before to do your miles, but I never realized how much of a financial benefit it could be. That's amazing.
It can be, yeah. If you drive very far at all for business, now you do not get to track from your office or from your home to your office, so your commute time you do not get to track. But then anything that you do outside of there, you go out for lunch with a client, my husband goes to pick up parts, goes to look at a prospect job, any of those types of things, goes to Office Depot, those are business miles. Any of those types of things that you do, that you physically go for a business purpose, those are business miles.
Gotcha. So even if you drive out of town, somewhere close though, but for an event or something, you can still write those miles off instead of like catching a plane or something. Okay.
Yeah. Well, and maybe you are driving to the airport to go catch a plane. Those are business miles.
Oh, yeah. Yay. I like that.
Yeah. Yeah. You made some money today.
Yes, I did.
So now the trick is to go back through your calendar and look to see where you went from January till now and see how many miles those were. So, yeah. But it's well worth it to track those miles.
Wow.
Okay?
Thank you.
Yeah.
Okay, so let's go to 6.
Yep. Okay. The next one I have for you is keep an asset listing. Now, I know you're going to say, what is an asset listing? That is any larger ticket items that you purchase for your business. So anything over about the $1,500 mark. Maybe you buy a new vehicle for your business. If you have vehicles that are owned in your business and you buy a new vehicle, that's a business expense. That's an asset you need to tell because the reason you're keeping this list is you're going to have to tell your accountant the date you purchased it, the amount you purchased it for, and what it was, and if you had a trade-in on it, what the trade-in value was, because that tracks your depreciation. And so if you maybe you bought a new computer and you bought a nice higher-end computer that was more than $1,500, or a printer. Maybe you bought a printer for the office and that printer was, because big printers are kind of salty. And so maybe you got a new printer. Maybe you bought office furniture. So you might have, bought a new couch for the lobby or something like that. Those are business expenses. And so you need to track and keep a listing of those, because you're going to need to give those to your accountant at the end of the year to be able to track depreciation.
Okay, so can we go ahead and do number 7? I don't think I have any questions for number 6.
Okay. The last tip that I have for you is to schedule a planning meeting at the end of the year before the end of the year with your accountant. Sometime from the end of October through the middle of December. Why are you doing this? Is you need to go in and see where you are today. So let's say that you go in December 10th and you go see your accountant December 10th. Your accountant will look at your books where you are as of December 10th. And at December 10th, you kind of know what you expect to come in for the rest of that year, because you're close enough to the end of the year. You probably know about what the income is going to be, if you have any larger expenses coming in yet. So it's a guesstimate, but you are going to look to see if you filed your taxes today as of December 10th, where are you going to be? What are your numbers going to be? How much tax are you going to owe? What tax bracket are you in? All of those fancy things you will be able to see as of that date where you are. Now, here's the great part of a tax planning appointment. How can you legally reduce your taxes by knowing where you are on that date? There are a couple different options. You can put money into a tax-deferred vehicle. Maybe you want to put money in a 529 plan for your kids because that's a college savings account for your children, and you can put money in a 529 plan. You can put money in an IRA. Maybe you want to put money in a 401k. And so if you put money in something like that, it reduces your income, reduces your taxable income, and you get money for later in life. So it's kind of a double win that way. If you're sitting close to that tax bracket, let's say that you're sitting close to the tax bracket of, you're sitting in the 22% tax bracket, and you need to reduce your income by $4,000 to drop into the 20% tax bracket. Well, you can put $4,000 in your IRA, and now your income is now taxed at 20% instead of 22%, which is going to save you more than $4,000. So you put more $4,000 and you don't lose it. You just don't get to use it now. You get to use it when you retire. So there's lots of advantages of going to sit down and look at those numbers in December or November before you get to the end of the year. Another way that you can take advantage of that is if you have, say you purchase some equipment. Maybe you buy if you farm, maybe you buy a new tractor, and you can get the tractor as opposed to paying that money to Uncle Sam, and you get to depreciate that for the next 5 or 7 years. So you get tax advantage today and the next 5 or 7 tax returns. So it's very well worth it a lot of times to be able to go sit down with your accountant and look at your numbers before the end of the year to see what kind of tax saving options you have.
Wow, thank you. I can see how that can be beneficial. One last question. For someone who, once again, doesn't have a professional person keeping their books, I think everybody should go somewhere to get their taxes done. But if they don't have that built-in relationship yet, is there something that they should be doing on their own in December to still try, or do you think they should try and get an appointment with whoever is going to file their taxes?
On that one, I would probably try to get an appointment with whoever's going to file their taxes, because you can look at your numbers, and are you going to know if you're sitting next to the tax bracket break? I don't know that a business owner would know that. So that's probably one I would recommend, that whomever you're going to use for your taxes, I would go talk to that person. And sometimes there's a decision that you're ready to make. I know, like some of my farmers, okay, we're going to buy a farm, but do we buy that at the end of this year so we have the expense this year, or do we hold off and buy it next year? So there's some of those types of decisions. Maybe you're going to add a location. Again, do you do it this year? Do you wait till after the first of the year? And as you get older in life, you have to take a required minimum distribution out of your IRA. And so, have you done that yet? So some of those types of conversations you can have that maybe you're not aware of as a business owner that your accountant or your tax professional will be aware of. So those are the types of conversations that we have when we get towards the end of the year with our clients.
Gotcha. Casey, I would like to thank you. The information you have provided here has been wonderful. I'm sure people are listening like, aha, or writing notes.
Yeah.
So I would like to thank you for being here today. Thank you all for listening. This has been, this has been another episode of Raeshal Speaks, or Raeshal Trying to Speak. Thank you all, and you have a wonderful day.